We're going to be talking about cross-border payments, moving money around from one country to another, from one border to another. We all do it. We're going to learn about how things are changing. We're going to learn how it used to be done, how things are being done today, and how the future looks. To talk to us about that, we've got Nadia. Nadia is heading banking and expansion at Wise. Wise is one of my favorite fintechs. I use it all the time. I'm not promoting Wise. I'm just telling you, it's a great, great fintech. Uh, so we're very, very fortunate to have Nadia to talk to us today about cross-border payment and the changes that are happening in the space. I hope you enjoyed the session. I'm going to pass it over to you, Nadia. Thanks again for joining us, and we look forward to learning from you all about cross-border payments today.
Thanks so much, Kareem. Thanks for having me today, and it's a pleasure to be here and to be able to chat with everyone. So looking forward to it. So hello, everyone. I'm Nadia, as Kareem mentioned. I'm working at Wise, leading our banking and expansion. So I'll go straight into it. Hopefully we have some exciting topics, and we'll be keen to hear your questions at the end, and as we go through things. So revolutionizing cross-border payments. So let's start with what are cross-border payments, just so that we can make sure that we're all on the same page in terms of course, what they are, but what's happening in that space as well and how it's evolving. So when you think about cross-border payments, of course, it's quite simple, really. It's essentially where the sender and the receiver are in different markets, right? So someone is wanting to send from one country to another. But the world underneath cross-border payments is much more complex than that, right? So if you think about the different types of use cases and different types of payments that are being made, there's many different types. And those different types of payments are also categorized very differently and regulated very differently according to different regulators. So depending on the country that you're in, when you're making a cross-border payments, you might be looking at it or having reporting requirements that could differ according to the type. So if you think about the four main buckets of what we're looking at for cross-border payments, there's global trade and e-commerce. So that's really pertaining to imports, exports, just businesses conducting their payments, and as well as like individuals sending payments to pay for goods and services internationally. We also have remittances, which are typically a much lower value use case, but very, very important for the economies of many countries. So where you see individuals sending money back home to family, to friends, or to their relatives in different countries, or even to themselves. Sometimes that falls within that bucket, right? Remittances falls into the me-to-me category as well. Investments, which are really key for financial markets. So you'll see the large scale investments in infrastructure, for example, and international spend. So this can be anything from tourism to students, etc. So again, these are all falling within the cross-border payments use space. However, each one of these can be treated very differently. Of course, the size of these payments can differ significantly. The senders and recipients can differ significantly. So, for example, when you're looking at a business payment, it's very important to look at the really under the hood, the details of who's sending that payment. That applies to every payment, of course, but when you're looking at a business, it gets a lot more complex because you have the beneficial owners that you're looking at. You have the type of company that's set up. Some banks or even payment systems will limit certain use cases or put higher restrictions on them from a regulatory perspective. So let's say minerals or the likes, right? So it really can get very nuanced and varied according to what type of payments you're trying to make. If you look at the breakdown of all of those payments that we just looked at, you'll see that the majority of those payments are done by small and medium businesses as well as by individuals. But in a bit less than half is done by large enterprises, so making things like the infrastructure payments, etc. Now, when you go a little bit deeper, however, into the two segments that are moved by people and SMBs, the actual number of transactions is the highest, right? So most payments, lesser volumes of most payments, are falling within those categories. So here you'll have a view of the different types of payments. So as I was referring to, there can be many, many different types of payments that occur, and these are growing on a yearly basis, especially in the spaces of healthcare, travel, and e-commerce. These are areas that are growing quite significantly, more than 10% on a 5-year basis. And most of these payments are also what we consider to be low value payments. So low value payments are typically considered to be any payments that are from around $100,000 or less. So that's kind of the use case and the types of payments that we're seeing. But how does this money actually move when we think about it? So traditionally and most typically, most money moves through SWIFT, or has moved until relatively recent through SWIFT. So essentially what we're looking at is a correspondent banking network. And it can get quite complex, especially depending on the countries that you're sending to and from, because there's lots of components or lots of banks that are sitting in the middle of that correspondent banking network. So essentially, if you want to think about it, it's the sending bank, so the bank of the sender in whichever country needs to make sure that the recipient in another country receives the payment. However, the sending bank might not have a relationship with the recipient bank. So they need to essentially talk to different banks along the way. So this is where we talk about correspondence. So they need to talk to different banks along the way to make sure that the recipient actually receives their funds in their bank account in another country. And so it can get very complex, because even the bank that has a relationship with the next bank, that bank might not have a relationship with the final bank. So you can really see it as kind of a chain. So who is connected to who within the international banking space, right? So it can get quite complicated because there can be many chains along the way. If you're looking at maybe some of the larger international banks, they might have connections with many more banks. And so it reduce the number of correspondents that come into the middle of it. But it can get quite cumbersome. So this is essentially the most traditional method of international payments. Now, this method has led to many problems and bottlenecks in the way, and many frictions for people. And so if you look at really what are the challenges that are raised because of this complex interconnected banking system, is firstly the speed. So as I mentioned, you have multiple banks talking to each other to essentially get to that last leg execution of the transaction. And by the way, when we're talking about these banks talking to each other, it's not just passing through information of the payment, like the transactional level information, so the amount that needs to be sent and the amount that needs to be received, but in many cases there can be much more detailed layer of, let's say, information that needs to be passed through, whether that's about, the transaction monitoring in terms of from a compliance perspective, so understanding the source of the funds, et cetera. So it can get quite complex. And so because you have multiple banks talking to one another, that really slows down the speed. And especially when you look at contexts where some payment systems in some countries have cutoff hours that, don't allow you to execute transactions beyond a certain timing, et cetera. The second main challenge with this network is essentially the cost that it brings. So there's two main components to that. And it can get quite complex. So I won't go into the details of like all of the different types of costs that can be taken off of these transactions that are going through the SWIFT network. But what you see is essentially each bank along the way, of course, because they're playing a role in the transaction and the execution of the transaction, it needs to get paid for the provision of services, or for being part of this network. However, there is a certain form of lack of transparency because not all banks are charging the same amount. And so what you'll see is each bank along the way might be taking a small cut, or a very large cut in some cases, of the actual transaction. So you don't really have necessarily, this is changing and it's getting better, but you don't always have visibility over how much you're going to receive on the other end, because you don't know which banks are kind of interfering in the middle of the way to be able to take a piece of that transaction. That's on the fee component. Now you also have the FX component. So really key in cross-border payments is, of course, the exchange rates that are being applied to the transactions. So when you're looking at, let's say, sending from Saudi to the UK, you have to convert the funds, and you're not always going to know what the exchange rate actually is that's going to be applied by the bank. You might know what the exchange rate is on, let's say, Google, when you Google it, or on your provider websites, right? You can understand what the exchange rate should be, but that's not always going to be the same exchange rate that is going to be applied, right? And so if you're looking at some point when the money is converted, the banks, they can kind of apply whatever, what we call spreads, but essentially whatever exchange rate they want to be able to execute that transaction. And so that really leads to a lot of lack of transparency. And so the customer just has no idea what they will be paying for. They don't have much of an idea of how much they're going to receive at the end, but also when they're going to receive it. So this can become quite complex. You're working across multiple regulations, time zones, payment systems that are not interoperable or not matching. And yeah, so that it can become quite cumbersome for customers. So more and more, as we are developing in the payment space and kind of bringing challengers as well to the whole system, what you do see is customers becoming more informed, which is a great thing, on kind of what's happening to their payment, right? So we see more and more customers who are unwilling to accept a poor service from their bank and from the network in terms of their cross-border payments. So here you can have an idea of what customers say they will no longer tolerate when they're doing a cross-border transaction. So if there are massively hidden fees, which is very often the case, 71% of them are now saying that they don't want to return to this provider for the use case. Now, of course, there's still an issue in terms of education, in terms of people understanding what an FX markup is, right? So the understanding what the exchange rate should be versus what they're actually being charged. But it's becoming, luckily, more and more commonplace knowledge for people to understand. But they still are less and less tolerating poor service because they know that there are options out there for them to be able to get better service. So this is changing. So Wise is an example, but not just us nowadays, but what we've done is we've built essentially a local banking network to bypass this problem, essentially. So what that means is essentially we have set ourselves up in many different countries, and then we open local domestic bank accounts where possible to be able to take advantage of domestic banking rails that would allow us to have much faster speeds. So hopefully connecting to local instant payment systems through our bank partners, but also having full visibility on the cost of that payment. Of course, we have to comply with local regulation. This is very important to us and anyone else who's working in this space because, executing payments cross borders can present very high risks. But by building a domestic network of local banks, we make it a lot easier for us and our customers to have visibility over the cost and the speed of the transactions. So that's kind of where we have gotten to today. Now there's a number of more detailed things that I'd like to go into in terms of where innovation is actually happening beyond the building of kind of a domestic banking network, which is becoming more and more commonplace and is something that at Wise, for example, we've been doing for about 14 years. But there are other ways that we're looking at innovation beyond this that is allowing us to provide a much better product for customers, and not just Wise, of course, but many fintechs who are operating on the cross-border perspective. So let's start by talking about probably the most essential piece, which allows for innovation and which allows for new fintechs to come into the payment space, and that would be non-bank access to payment schemes. So kind of picking up on some of the previous slides, as I was talking through the complex network of correspondent banks, very similarly, and not just on a cross-border basis, previously it was very difficult for new payments and companies to come in and disrupt the system because they wouldn't have the same level of access and authorizations to be able to execute payments domestically even, right? So forget about the cross-border piece, even on a domestic perspective, it was always very difficult. So what you would see is maybe payments companies coming in and still having to go through banks to be able to execute payments because only the banks were allowed to have access to the payment systems. Now, more and more nowadays, this is changing. So I would say within the last 10 years or so, you're seeing many more countries who are coming out with new advanced regulations specifically targeted towards non-bank financial institutions, and allowing them to connect directly to the payment systems, whether it's to execute the payments or to hold a settlement account with the payments institutions. And this is really removing the idea of having a middleman and again allowing for more transparency and reduced costs as well as improved speeds in international payments. Now, one of the most important things within all of that is the development of faster payment rails. I'm sure everyone on this call has suffered through, the slow rails that took 3-4 days to get one payment from one country to another, and even sometimes domestically, right? So, of course, the development of faster payment rails that's accelerating really in the last 10 years across the world really has been key for cross-border payments as well, right? So it's really important that we see that development continue globally, of course, in Saudi that already exists with Sari, but we would like to see that continuing as kind of a global trend. But again, it's key to be able to have non-bank financial institutions also be able to access those payment rails, those instant payment rails, but also beyond that, allow for cross-border payments to actually be executed within those payment rails. So what we are seeing as well in some countries is that the regulation hasn't yet developed quite to the point where international transactions can actually be executed on those rails because of certain types of information that is required or habilitated to be able to be sent to, let's say, the regulators or to the banks when you're connecting to these payment systems. But that is really key for more and more regulators to start developing those payment rails to improve cross-border payments and to provide for more innovation. Approximately 100 jurisdictions have these faster payment rails. So as I mentioned, things are progressing quite a lot, and we're seeing a lot of movement in the space, but of course, there's a long way to go. So I want to also highlight some of the benefits of the direct access to local payment systems. So at Wise, we're in terms of direct access. So we're in more than 40 countries globally from a payments perspective, but from a direct access perspective, we are in more than 5 countries, and there's a few more on the way. And this is really a global experience that we're having. And the benefits are just very tangible, right? You can see them from one day to the next. As soon as you complete an integration with the local payment system, you see the impact of the direct access. So in the UK, for example, we were the first company to be connected to the faster payment system, and almost instantly you saw an increased speed of 98% to payments less than 20 minutes, so it's 20 seconds, sorry. And that's again on the cross-border perspective, right? And then the cost savings are incredible. So you see 77% reduction in costs in the UK, and this experience is replicated over and over again in the Philippines, which was one of our more recent direct connections. We actually connected to 2 different payment systems, and again, you see previously we were doing 0% instant payments because we weren't able to connect with the appropriate banks to be able to do the instant payouts, but we're now doing 90%. So again, this is just a testament to how important it is for banks to be able to, for non-banks to be able to have that access so that we can pass on those customers to people like yourselves and myself, and customers in general. One of the reasons why many central banks don't yet allow for direct access is a perception that essentially there's not the same level of security for non-banks. However, what we've seen is in all of the countries where they are developing payment systems who can be accessed by non-banks, they actually develop stringent enough rules that must be abided by all participants, right? So if a non-bank can abide with those rules, then they can participate. And of course, if they can't abide by those rules, then they won't be able to participate. But essentially, you're leveling the playing field between any type of player who's in the market. And it's been found actually by the Bank for International Settlements that having non-banks access the domestic payments, the instant payment system locally doesn't actually reduce any kind of security. So this is really exciting, and this has also been corroborated by the Financial Stability Board, who within their G20 roadmap for enhancing cross-border payments has actually put as one of their building blocks the ability to improve direct access for non-banks. So this is what we see as probably one of the core areas of innovation and one of the most important things for enhancing cross-border payments, but there's a few other areas. So we also have the development of eKYC. So when we think about cross-border payments, traditionally what you might see is customers who go to their provider, whether it's a bank or any other type of provider, they go to the branch, they present their ID, either they give cash or they make a payment locally, but they usually have to be present. So, like this was previously, of course, but they usually would have to be present to be able to execute that transaction. And that, of course, really, really slows down the cross-border payments experience and increase costs because, of course, now you have physical agents who need to be there to go through the documentation that the customers are bringing and actually execute that transaction. But beyond that, it also actually can reduce the security, right? So nowadays we have really advanced systems and systems that will actually be able to verify customers. So not just from the onboarding experience, but beyond that from a transaction monitoring perspective. But if you think really about even just the onboarding, and when I say we, I say the industry, you can verify IDs and you can actually see, because of like very sophisticated models, you can understand whether these IDs are valid or genuine or whether they are fake IDs, et cetera, through facial recognition, et cetera. So there's lots of technologies that are developed that will allow institutions to be able to properly onboard customers and understand the risks that are being posed. And there might always be some form of manual components in case the system is not able to detect entirely whether this person is legitimate or not. But it really accelerates the speed at which people can onboard as well as the security elements. And again, this also applies to anything from monitoring, screening. So, making sure that we're monitoring for adverse media, monitoring for politically exposed people, people that might be convicted of crimes, et cetera. And that's through integrating with all different types of local systems within the country so that we can really verify these people. So this is really important. To innovate in the cross-border space, because again, as I said, otherwise it would be all very manual, it would be a very inconvenient experience. And we do see the need for regulators to continue doing so. But it's exciting to see that more and more regulators are allowing for digital onboarding of customers, including businesses, by the way. Another area of innovation that we've seen over the last 15 years or so is and probably accelerating in the last 10 has been the development of mobile wallets, which enables also better financial inclusion. So when you think about digital wallets, it's essentially a wallet that allows for payments to be made. So it's digitally based, either with a software and app, could be linked to your mobile phone, and essentially what allows you to either store value, and from that value that you're storing, it allows you to facilitate payments between individuals or businesses. Now, there's different types of wallets that we look at. There's closed wallet, which you can think about it like a Starbucks wallet, or a wallet for a specific company, right? Whether it's like a gift card type of wallet. And those really are only utilized on a single platform, Amazon maybe. You have semi-closed wallets, which are essentially wallets that what we usually know as digital wallets that allow for payments and transactions within that same network, and within peers within that network. So I can make a transaction to someone else's wallet who holds within that network, but not outside of that wallet. So they're not independent financial systems, but what you will see is some, I don't know, let's say like fintech startups who are doing this, or even banks who are doing this. One of these examples is Nike. It's a Colombian fintech that was an offshoot from one of the main banks in Colombia, and which allows people to make payments within the wallet. Then you see mobile money wallets, which are usually linked to a phone number. So they've really been developed by telecommunications providers. Really, the founding place of this was in Kenya back in 2007. So they created this whole system where many unbanked people were actually now able to access stored value facilities through the mobile wallet. And be able to make transactions, and you can actually make bill payments, you can pay merchants, you can again pay your peers, etc. So that was kind of almost the founding of this. And then you have open wallets, which are usually more like fully interoperable, which allows for unrestricted transactions and are usually associated with a debit card or a credit card, or other kind of payment instruments. And so that's where you see like Apple Pay, etc. Of course, those can work internationally because this is really your card essentially working internationally. But when you think about on the cross-border basis, which ones are the wallet types that are gaining much more popularity and traction, you'll see on the semi-closed and the mobile money wallet types. So just a couple of numbers here. So today we have globally 3.4 billion users who are using digital wallets globally. So that's almost 42% of the global population who's transacting on some form of digital wallet. And that number is anticipated to increase to around 50% of the world's population by 2026. So pretty impressive numbers considering that this is something that hardly existed, even 20 years ago. But it goes to show how convenient this product is for many people, and also how necessary it is, even if you're thinking about the unbanked. If you think about how we measure unbanked, the way of measurement of the unbanked used to be people who have access to a bank account. And a few years back, the World Bank actually changed that definition to look at people who have kind of mobile money accounts, etc. And that was a really strong impetus to increasing financial inclusion globally. So that's very cool. There was 13.9 trillion in transactions in through mobile wallets, digital wallets, etc. in 2023, and this is expected to increase. If you look at China alone, approximately 82% of all e-commerce transactions were actually executed through digital wallets. I'm going to speed up a little bit just because I think I'm running a bit late on time.
You're okay
But
in time. Don't
am
worry.
I okay? Okay, sorry. I just
You're
checked
okay.
the time. Okay. Yeah, so a big growing area is remittances, of course. So in 2023, we saw 29 billion of remittances going through mobile wallets, and this is expected to increase to about 71 billion by 2026. The nature of the payments going to digital wallets is very different from bank transfers. So you see that usually this transaction size is much lower for mobile wallets. So here this is kind of data from Wise, but our average transaction size for mobile wallets is about 155 pounds versus 951 for bank transfers. But they tend to transact much more frequently, and the payments tend to be instant. So that's also a key feature of digital wallets. The experience can also be much better, much improved. You're probably all familiar with, having to insert all of the details for the recipient when you're trying to make an international payment. When you're looking at mobile wallets, often you really just have to put their phone number in and their name, which makes it a lot easier. And then all the checks happen, of course, in the background. But from a customer perspective, it's a really improved experience. So that's why you also see many more people kind of taking this on as a payment instrument. Another area of change, what we're seeing is partnerships. So partnerships, and when I say partnerships, I'm referring to partnerships between essentially banks and fintechs, right? So this is a view of Wise's partners, but of course, there's many other types of partnerships happening worldwide, between banks and other types of fintechs everywhere. And I think it's really cool to see this evolution, because when you see the fintechs who, back 15 years ago or so, it was really almost like fintechs against banks. But nowadays, both have realized that we're only going to create the best product if we work together. And so it's becoming much more common, and it allows banks to like leverage the innovation and the infrastructure that's being built by fintechs, enhance their own offerings for their own customers, especially when you think about the fact that many customers, they fidelity to their banks is quite high, and so many of the customers won't necessarily be moving away from their banks to go to a fintech, but the bank might still want to offer the best experience. So this has really been a cool development that we've seen over the last decade that's allowing for a lot more innovation and improved product offering globally, really. So in an example of one of our partnerships is Bank Mandiri in Indonesia, and this really allowed for cross-border payments to increase by more than 20% month on month, which is pretty impressive level of growth. And this is for the Mandiri's customers specifically. We also do have a partnership in Saudi with SAB, so that's something that's growing now, and we're looking forward to continuing to grow our partnerships in the kingdom as well moving forward, and leveraging off one another and working really closely together as partners. So going into just a few slides on future trends and challenges, and really I don't know if I would call them future as much as current, but trends and challenges that I think will become more and more prevalent as kind of time goes. So if you think about the trends, many of you might have heard of stable coins. So stable coins are a form of cryptocurrency. So they're really the thing that's causing the most noise at this moment in time. So stablecoins are interesting for people because they are low volatility digital assets, because they're pegged to a fiat currency, often to the US dollar. That's kind of the most popular type. So when you think of USDC or USDT, and so it really allows for people to utilize crypto in a way that's not so volatile as the traditional ones that you would have heard of, of course Bitcoin, Ethereum, etc. And it's becoming very popular, especially in countries where there are much more highly volatile currencies, where countries where there's high devaluation, even on a daily basis. So it really allows individuals and businesses to be able to almost hedge against kind of currency volatility by holding different stable coins that are relatively secure because they are pegged to these currencies. And again, maybe it's a way of not investing in Bitcoin, which is highly volatile. It's really just almost we're starting to see it as another fiat currency. Of course, it's not quite there yet, but it's almost kind of that's the development that we're going into. And because it's built on blockchain technology as well, there's a lot of benefits to that as well. There's a lot of challenges and drawbacks, of course, too, in terms of the visibility over the payment, et cetera. But that's improving quite a lot because it's any kind of provider of cryptocurrencies has understood that we need to be able to have visibility over all of the payment, all of the legs of the payment, and understanding the sender and the recipient. But again, it allows you to make payments on a system that is not bogged down by the traditional systems or traditional rules that were in place that are still a little bit slow to be changing. So for example, instant settlements 24/7 in place of other systems where the settlements are much slower. So that's really one of the big areas. Here are a few numbers just to highlight just how big it's becoming. 18.6 billion were of stablecoin remittances were sent to just Southeast Asia alone in the first half of 2025. And if you look at Latin America, over 71% of businesses have actually adopted stablecoins. So it's really something that's growing a lot. And if you're in the cross-border space, you hear almost every player talking about it at some point. Another trend that's becoming more and more popular is the idea of digital nomads and global hubs for remote workers. I know, Riyadh is also becoming a little bit more of that, where we're seeing lots of people coming to Riyadh to work, etc. And this is really just people have more cross-border needs nowadays, and it goes much more beyond just payments. So it might be holding different currencies in their accounts, so multi-currency accounts, even investments, etc. So it's really how our banks, how our fintechs, how our players, and regulators, of course, because that's actually a very important part of it. Some regulators haven't still kind of caught on to the fact that actually they have many foreigners living in their country who actually have needs, banking needs that are domestic, but also international, right? So you're seeing a shift towards people really thinking about how do we service these types of people. So today there's around 40 million digital people who qualify themselves as digital nomads around the world, but that should increase to 60 million in the next few years. But again, it's not just digital nomads, I mean, it's anyone who's, really has, freelancers is a big area where you see people who are working in one country, but they're actually getting paid in a different country because they have clients in a different country. And so they have the need to be able to get paid from those people, or businesses. So that's becoming more and more of a trend. Now, moving into the challenges area. So you've heard me talk about transparency. I would say that transparency is probably the hardest issue to resolve, and it's something that that we've been working on quite hard over the last, since our existence, really, to mitigate the, murkiness of what people are paying or when are they going to receive their payments, when you're talking about cross-border payments. So what we did last year is we launched a report essentially on the ranking for G20 countries, and looking at their rules around price transparency. So we essentially developed a scorecard, just to highlight where different countries stand, in terms of their transparency regulations. So it's really a sliding scale in terms of regulatory progress on establishing the frameworks for FX. So it really just allows countries from the G20 to have a view of how they're doing and to maybe take action on how they can improve their transparency frameworks. And actually, and in some cases it's that there's just no rules whatsoever, or in some cases there might be rules. For example, in the case of Brazil, there's rules, but maybe it's not as properly enforced as it could be or as it should be to really be able to ensure that all payments are actually transparent. Our scale is from 1 to 5. And as you can see here, not a single country has yet reached the 5-on-5 ranking. So you can see it's quite difficult, even in countries that are making an effort to really implement those rules. It can become quite difficult. Another area is that regulatory frameworks are not always fit for purpose. So I've talked about it a little bit, so I won't go into too much detail. But again, thinking about the countries where non-bank financial institutions cannot have access to local payment systems is quite restrictive. And other types of lack of rules or antiquated rules, essentially. You look at, and there's been some good developments, but for example, you look at a few years ago, just in Mexico, actually customers couldn't be onboarded. So I was referring to the digital onboarding. So a couple of years ago, on their money transmission license that was allowed, customers still had to go physically to present themselves to be able to do a cross-border payment. And this was literally just a couple of years ago. So luckily, that's changed a lot, and now people can onboard remotely. There's still quite a few restrictions, however, to that product, or to that regulation. And there's a lot to be done. And again, this is not just in Mexico, but in many other countries as well. And there's still a bit of a slow speed for some of the regulators to get up to speed to how do you actually develop your rules, your regulations, your payment systems, et cetera, to be able to allow for more efficiency in cross-border payments. On the direct access side, so the rankings that we did, the G20 report that we put together at WISE, was about transparency as well as direct access. So here's also a view, and you can see that many systems are a bit outdated still. So one is essentially where only banks are allowed to have direct access, and then again there's a sliding scale. So in some cases there might be consultations around this in the cases of the US, Argentina, et cetera. And then in some markets, and the 5-on-5 scoring would be, there is a specific regulation around providing access to non-banks, and there's at least one non-bank participating. So you see a lot more progress in this area than on the transparency area, and which is good to a certain extent, because it really means that that allows for a lot more innovation in the cross-border space, but there is still a long way to go. the final challenge that I'll talk about is data localization requirements. So we are seeing more and more heavy requirements for fintechs to be able to come to a different market, right? So if you're talking about the cross-border space, there's going to be a lot of players who are actually operating cross-border, right? So who are setting up in different countries. And a lot of the regulators have really strong data localization requirements, which are understandable to a certain perspective. And, companies are definitely willing to work with regulators to make sure that the regulator has visibility over the data that's being processed within country. However, the way in which that can materialize can be quite complex, right? So in some cases, you have to have a local storage of the data. In some cases, you just have to do a replica, and that makes it a lot easier. But it's becoming quite sophisticated and quite stringent. And I would say it's very, very heavy technical build for companies to be able to build that local data localization requirement. In some cases, for example, global providers are not even present in some of the markets, and that makes it very difficult for companies to operate cross borders. So again, this is an area which is constantly changing, right? As systems get more mature, as regulators get more mature, et cetera. But it's definitely something that can hinder growth and can hinder expansion for companies if it's not done appropriately. Okay, I think that's it. So I'll stop there.
Perfect timing.
Yeah.
Yeah, perfectly timed, Nadia. Thank you so much
Yes.
for this. Well, first of all, yeah, and before we move on to Q&As, a lot of the questions were related to the sources of some of these numbers that you showed. So before you sharing this presentation, if you can add those sources, we would really, really appreciate that. And a lot of people were asking for more knowledge on cross-border payments. So if you have any useful links that you do want to add to this presentation, that would also be very, very useful. Uh, I'm going to start with a couple of easy questions. I had a few questions related to the difference between Wise, and I'm going to talk about Wise a bit, although and it's again, we're not promoting Wise here, but what's the difference between Wise and PayPal? Are they different type of wallets? And how is it different? And the same can apply to Wise and Ripple. Do you guys have a partnership with Ripple, or how are you different from Ripple?
Yeah, so I would say the premise of a lot of these companies is very similar, right? Because they're operating in the cross-border space. I would say the main difference, let's say, between Wise and PayPal is probably the infrastructure that we've built. From Wise's perspective, we have licenses in more than 20 countries and more than 50 jurisdictions. And I don't believe that PayPal has that level of infrastructure. And I think it's also just from a business perspective, kind of what are the things that you're targeting and how are you targeting customers? So from Wise's perspective, we really focus on transparency and cross-border payments. PayPal tends to be very murky with how it's showing its rates. So it can be a very expensive product and you can actually not have much visibility over what you're paying. And we at Wise, we also focus on a number of different product areas. So we have what we call our assets product, which allows people to invest in money market funds in some markets where we're regulated. We have the debit card associated to it. We have multi-currency accounts. And again, I really think the main difference there is kind of how we're regulated, the system that we have. They're both like open loop, I would say, in a sense. So I think PayPal, you can make payments to banks. It's not that you can only make payments within the PayPal network. Similarly with Wise, you can of course make payments within the within the Wise network, but you can also make payments outside of it, and similarly with PayPal. So I think that would be kind of the main differences that we're looking at. So it's really about how do you develop your product? How are you regulated? And I think the regulation piece is key when you're looking at the cross-border space, because that's really everything in terms of how can you actually operate cross borders and how can you enhance your product cross-border.
Nadia, I have a very interesting question, and again, maybe yeah, I don't have any info about that, so hopefully you have. So the one attendee is asking about comparing systems that use Swift versus locally developed systems like SIPs of China and SEPA of Europe. And I don't know if you have any info that you can shed on that in terms of volumes that are shifting to more localized Rails versus Swift. And from your perspective, where do you see that going in the future?
I don't know if I would have any data off the top of my head for specific domestic payment systems. But what I can say is that it's increasing. I mean, even if you look at the volumes that Wise is doing, I mean, we're doing, I think, more than 10 billion pounds a month in cross-border payments in terms of volumes. And that's all mostly money that is no longer being routed through Swift. We do operate through Swift on some stuff, but like that is mostly volumes that is being taken away from Swift. And Wise is, of course, not the only player who's doing that. So you'll see in many other companies and many other fintechs. So the trend is definitely to move away from Swift. Now, Swift is also working on kind of making its product a lot better and a lot more affordable and transparent and fast, right? So there are developments on the Swift network as well. So we'll see kind of if they keep up to pace with the domestic payment systems. But I think when you also see the development of local instant payment systems, right? I think, and those payment systems which allow for cross-border payments, especially, you're going to see less and less movement via Swift because companies can just directly integrate with the local payment system. So I do think the trend is 100% towards domestic payment systems. But again, it really depends on, are you allowed to, and like a few different factors.
I think a follow-on question to that is related to, and I think you just elaborated on that, but maybe you want to add something on top with regards to the concept of money not leaving the originating monetary zone and how that works in the context of cross-border payments.
Yeah. So that really, I mean, again, how that works is essentially on from a netting perspective. So you essentially see the outgoing and the incoming flows, right? And so what most companies will try to do is optimize to net as much as possible such that they don't actually have to do a cross-border transaction, right? So you would aggregate all of the funds, essentially look at it from an aggregate level to understand, okay, how much money is going out? So let's say 10 billion, and how much money is coming in? 12 billion, right? And so then you know that you only actually have to bring in 2 billion, right? To be able to actually execute the customer demands from that market, right? So this is not possible everywhere, by the way. There are some markets which have more stringent capital controls where actually the regulators want to see all of the outgoing flows and all of the ingoing flows, and they don't want to see a netting. But I think that's quite less and less. You know, there's most countries will allow for this. What you do have to do in most cases, however, is report on the transactional level what are the payments going in and out of the jurisdiction. So the central banks will want to understand what's happening and, you know, like how many payments are going out, what do they look like? And the reporting mechanisms can be from very complex to like, you know, very detailed transactional level to more aggregate level reports that must be done. But again, in terms of efficiencies, like the most efficient is really to not actually have to send any money cross borders, because then you can really make use of the domestic instant payment system. Yeah.
Uh, The other question is related to the fact that you guys are operating in 40 plus countries, and that number, I assume, is going to continue increasing. We live in a world today where there are sanctions being dropped left, right, and center in the middle of the night. And how do you deal with that? How do you deal with regulatory changes? And obviously, it has an impact on cross-border payment and your operations in general. So just maybe shed some light on that.
Yeah, of course. So in all markets that we're operating in, and you know, I think it's not unique to Wise. I think most banks and financial institutions would be the same. We have a huge compliance team who's really dedicated to that, to monitoring, you know, all of the regulatory developments down to the, you know, the very detailed, you know, new requirements on KYC, all the way up to, you know, more serious and bigger level things like sanctions, and whatnot. So we have hundreds of people dedicated to all of these different areas. And yeah, again, we're monitoring on a regular basis. We're constantly engaged with the regulators as well. Again, if you're operating in the cross-border space, there's nothing more important than maintaining a close relationship with the regulators to, first of all, understand what is their risk tolerance, what are their concerns with the cross-border payments industry, and making sure that you're constantly complying with it. For us, that's really the most important thing. And yeah, and so, we're watching, and if we see developments that are happening, we'll monitor. And as soon as kind of we have news from, let's say, the regulator, even if it's, behind the scenes, we'll also know to start implementing things. And sometimes the regulator won't necessarily be saying things, but we'll know that elevated risks are happening, right? So if you're looking at, in cases of the Russia-Ukraine war, we were of course monitoring it, like even before, for months before it broke out, we were monitoring this and ensuring that we're putting specific rules in place and controls in place to make sure that any transactions that we're going through, we're not going to sanctioned individuals, etc. So there's a lot of work that goes on behind the scenes to make sure that we're keeping up with the developments of any kind of political changes or shifts in kind of the world order.
Nadia, switching away from a bit of geopolitics to technology again, is open banking impacting cross-border payment in any way? Is it being utilized? And are you looking into that as well?
Yeah, absolutely. So, I mean, open banking is like an amazing development in the payment space, right? So it makes payments so much easier because, of course, you're now through open banking, you're connected to banks. So what you see is a lot of the customers really utilizing tech, or us and our customers via us utilizing that technology to be able to initiate payments, to make payments, etc. And a lot of those payments are cross-border, but the initiation of the payment, for example, still needs to be done on a domestic perspective because you need to be able to top up your account or to fund the transfer. So open payments from a payments initiation perspective is very key to a convenient experience, but also in terms of sharing information amongst the participants of the open banking network is to understand, like who are the clients that we're servicing, running those background checks on the individuals, on the businesses, etc., is really important to be able to, again, make the experience much more seamless.
Two more questions, easy questions, and then I'm letting you go, Nadia. The first is related to Wise and the platform's ability or the ability to connect to the platform through API for e-commerce. And the question is specifically related to Jordan and Mina. I don't know if you have any information you can shed on that uh, related to e-commerce payments and such.
Yeah, so we have an open API and we have kind of a more dedicated API for usually for large financial institutions. In the region, we because we're not licensed yet in the region, so we have to work through partners who are also locally licensed. So for example, I'll give the example of SAB. Obviously, this is not e-commerce, this is like payments through a banking system, but with the SAB partnership, they're actually leveraging their local license to be able to initiate the payments and do the cross-border leg of the transfer. And then what they're utilizing is our network to do the payout, the distribution of all of the payments that their customers are initiating. So like on the cross-border basis, not everywhere in the world, but in the markets that they've chosen to work with us in, that's how we're doing it. So that is just where it becomes a bit complex on the MENA side specifically is like, are we regulated to be able to do the cross-border transaction or not? And so it kind of depends, if that makes sense.
Okay. Well, just saying, I'm not gonna say anything about SAP, but we don't see the value and the benefits are not being transferred to the clients. Maybe we'll tell them that. Uh,
Okay.
Nadia, last question, or actually, there was another question that I wanted to ask before that last question, but I lost it here. Last question is a lot of people are asking when is Wise going to be available in Saudi Arabia and what's taken so long? What are the blockers that you are facing? You can
Yeah.
disclose whatever you want here.
Yeah, no, for sure. So Saudi Arabia is clearly a market that we are actively looking into. You and I have spoken for quite some time now. So yeah, we're in the process of kind of figuring out how we can get to market there. I'll be there next month as well, for Money 2020. So very excited about that. I am going to start hiring a role, so I'll use this platform to publicize that. But very soon you should be seeing a role being posted on my team in Saudi, specifically in Riyadh. So yeah, we're working on it. And yeah, I'll leave it at that.
What are the skills that you're looking for? Because people have been asking about some opportunities. So anyone who's looking for an opportunity in cross-border payment, follow Nadia on LinkedIn and keep your eye out on that role. But what skills are you looking for? Maybe they can prepare for them.
Yeah, for this role specifically to start with, I'm going to be looking for someone primarily who has regulatory experience with SAMA. So someone who ideally would have worked on local licensing, ideally the major EMI license, but other licenses could also be relevant. So someone who has any kind of experience on that. Of course, if you're familiar with payments infrastructure, partnerships, et cetera, that helps a lot. But our main focus right now is going to be on the licensing side.
Nadia, thank you so much for your time and for this information. It was a very insightful session. We look forward to receiving the updated presentation with just some resources for our
Yep.
eager attendees so we can share it with them. Thank you so much again, and looking forward to seeing you in September.
Yeah, looking forward to seeing you as well. Thanks so much for having me.
Thank you.
All
Thank
right.
you, all of you, for joining us. Looking forward to having you with us again next week for session 7. And thanks again for everything. Take care.